Hey everybody, Boris from BK Forex. Welcome to the weekly technicals for the euro dollar, dollar yen, and pound dollar for the majors June 24, June 28, 2019. All eyes next week, of course, are going to be on the G20. It's Trump Z and the G20 as the primary driver of trade. The critical thing here is, do we get a rapprochement? Do we get some kind of a cease of hostilities between US and China? Perhaps even a hint that they could come to some terms on trade. There's certainly a lot of speculation and hope that that happens because the idea here is that Trump clearly wants to do a deal before the elections to make him look good, to keep the economy going, and keep growth going. All of that would be massively positive risk if there was even a sort of a small hint that that occurred, and certainly would help dollar yen, which is in the doldrums now because of the yield pressures. On the other hand, euro, cable are looking good both on kind of anti-dollar flows and I guess on their own technicals. There isn't really a fundamental story that's driving either one of them. The news out of both regions is in no way, shape, or form good, but it's really kind of an anti-dollar story that's driving flows here far more than you would think credible. Still, if you look at the technicals here, you're going to have to trust the move to the upside. And at this point, both of them are looking much more like a buy the dip story than a sell the rally story as we go forward. So we'll take a look at the charts in a minute. Let's take a look at the levels first. The levels in the euro have really improved. They've gone from about 111, 113 to full 2 cents up. Now it's 113, 115 on the support resistance level. Yen is really mired at the lows, but I do think this 106.50 should be a hold level. It's very close to the fat finger lows at the beginning of the year. And I think the only way this really gets broken to the downside is if the 2-year on the U.S. gets broken below the 2% level. That is possible if there is just sort of very cold, ugly resolution on the G20, because as a result of that, I think the world is just going to go into a complete risk-off mode. And at that point, you could even see dollar yen go down to 105. But I think you basically have to make the bet that it's in both interests, both leaders' interest, to save face and to come up with some sort of even a political solution to this. And that provides a little bit of positive flow for the market. We'll have to see. Cable looks good technically, although I really, when you look at it fundamentally, there's just little drivers here that want to drive it up. The Tory leadership race, while certainly coalescing around Boris Johnson, doesn't really give you a lot of faith and hope, as Johnson himself is having legal problems right now. So it just seems to be a bigger political mess than even the U.S. is in some ways. So it's hard to get fundamentally strong behind cable at this point. But I guess the assumption here is that one way or another they're going to muddle through, and they will then turn their focus back to trying to do some kind of a Brexit deal. We'll have to see. At this point, you have to basically just trust the technicals, because there's nothing on the fundamental side that really makes you feel good about any of it. Let's take a look at the calendar here and just show you. It's a relatively quiet calendar. So we have IFO, which is going to be negative euro, because Kathy thinks that the weaker factory orders and the zoo are all were negative. But she's it's a mixed picture because PMIs were up, and that's a key thing. So you can't really get hyper negative euro, and perhaps maybe it's one of those kind of things where even if IFO is mildly positive, it can propel us to the 1400 handle level very, very quickly. On the U.S. side, it's just housing data as we get into the middle of the week. Nothing really of any import. Then we get European confidence data and the European CPI. Both of those actually look to be quite bearish euro. But again, at this point, I think so much of it is kind of factored in. Then we have revisions of the GDP in the U.S., which certainly are not going to be a big core thing anybody cares about. And then finally, end of the week, we do get personal income, personal spending. That should be, the interesting thing here, ironically enough, is that we had a situation where economic data in the U.S. was not great, but the dollar was actually rising. Now we have a situation where the economic data in the U.S. has actually improved, but the dollar is falling. So it'll be interesting to see if this economy gets resolved differently. We're bullish dollar on this. Retail sales rebounded. Wage growth has slowed, but not materially so. So if we do get personal spending a little bit up, that should be positive dollar yen. It's another one of the reasons why I think it just feels like it's really getting washed out here. Now let's take a look at the charts here and just see how everything is shaping up from this perspective. So I think the most important key technical takeaway on the euro, let me just move this down so you guys can see this, is how wide and how strong this bottoming process is. We really seem to have affirmed a 111 bottom here for the time being, and that suggests that this bigger the base, the stronger the breakout, the euro is really ready for a significant massive turn. This is why I'm saying it's become a buy the dip story, because at this point, unless and until 11 is broken, if 11 is broken, then of course the whole thesis is off, and it's been just another fake false breakout. But for now, the full big pattern here of a massive W bottom suggests that we're actually ready for a move through the 15s, 16s, perhaps even all the way out to the 17s on the 500 SMAs as we go forward. So we did have a big break here, 1, 2, 3 candle break here. Certainly this 14, 15 probably going to cause us a little bit of consolidation and congestion. To me, the interesting thing is how do we handle this congestion? If we break down to the 13s and buyers come into the 13s, that's going to be very bullish, because that's just going to suggest a higher low and a further affirmation that this is indeed a major positive turning point in the euro on the technical side. So I think you're going to have to just treat it as such until proven otherwise, because the size and the foundation of this base is really impressive, and it kind of suggests that maybe the sellers are done, the buyers are ready to take it higher. Pound is not the same, but certainly similar. Pound looks good. I mean, you look at the pound formation. It's a W formation that's sort of a lower high, but still very good. The end of the day flows are very positive. We close on the highs on Friday. It just feels like it's a screaming long here. If we can take out, it feels like it really wants to go to 28s, and then the key thing is if it can sort of consolidate around 28s and not really get badly sold off, that suggests, again, another big turn in the pound on a move. And then once you get through there, the move to 30 has zero resistance. So all of this just kind of points from a technical basis as a powerful spring towards higher action as we go forward. And then dollar yen, well, by far the weakest of all the majors, but you are at these very key fat finger lows. So if we sort of ignore the absolute algo-driven drives over here that quickly got bought up, if you sort of assume this was the natural low equilibrium, this was around, if we look at this is about 107.50, right? I think we've tested it. I don't think we didn't quite break the, we tested the 107, but didn't quite break it, right? So to me, the first order of business is, can dollar yen hold 107? That's going to be a really interesting look front of the week. If we have a day or two where the 107 holds and we're moving into the G20, you got to take a punt on this thing to the long side on the assumption that G20 is going to be positive and we have a chance to run to 108, 108.50. If they do take it out, then the really big story is can they hold the 106.50? Because again, to me, the 107, 106.50, almost the same kind of a thing in terms of holding that as a bottom for a possible turn into the end of the week as we go. Now, if 106.50 is broken, then I think all bets are off. At this point, the sentiment becomes so dire and dour. But we have lots of evidence here of where we have large, sharp sell-offs in the yen, and then consolidation, in some cases even almost a full retrace higher, in some cases just simply consolidation for a week or so with maybe about 50 to 80 points to the upside. Here's the consolidation for almost a month or so with a 50 to 80 points to the upside. So I think if you follow the pattern here, we're closer to the bottom than we are to the top, certainly. Buying a dip here, probably not a horrible thing. With a 106 hard target. I mean, at that point, you just, you got to cough it up because you don't know what's going on. But it seems to me that I think a reasonable trade here is you either wait to see if you can hold the lows and then try to trade it to the 108s, or you just take a bite over here and hold the 106 stop as your emergency stop and let this thing flow to the upside. So that's how the week shapes up. I wish you guys the best of luck, the best trading. Boris, over and out.